Okay, guys, welcome to this webinar with FX Street. My name's Craig Cobb. I'll be taking you through the next hour or so of content. And this webinar is titled High Performance Trading for a Busy Lifestyle. I'm basically going to be showing you how myself and the team of traders that I work with on a day-to-day basis go about trading the markets, basically, and managing our lifestyle around trading. I'm getting people saying good morning. It's actually 8 p.m. for me. I'm in Bondi Beach, Sydney, Australia. So good evening, good morning, wherever you may be in the world. This webinar will go approximately an hour, and guys, please, if you have any questions, please feel free to type them into the box. And I'll answer your questions as we go. All right, perfect. So, high performance trading for a busy lifestyle. Let's first of all just get this risk warning out of the way, guys. I'd like you to just have a quick read through that, but as we do that, I'll just explain what we're saying here. This webinar is completely for educational purposes. Anything that you take away from this that you may decide to go ahead and use, if it comes and puts you up in a loss or whatever it may be, we will not be held liable. Okay, it's purely for educational purposes only. I will not be tipping at all on this webinar. Full terms and conditions at tradewithprecision.com/terms. You can check that out. If you don't agree with this, please leave the webinar now. Must be nice to trade by the beach. Yes, it is. It's nice to trade, so I've got time to go to the beach. Okay, the agenda. So a bit about Trade with Precision. I'll introduce you to the company, who we are, what we do. I want to show you the path to successful trading. I'm not just going to give this to you as lip service. What I'm going to say in this event, I'm going to mean. I'm very passionate about this subject, and I want to say one thing from the get-go. There's no get-rich-quick here, guys. I've been there. I've done that. I've spent 6 years in London chasing around silly courses that promise the world and deliver a pile of steaming, yep, you know what, and I'm not into that. I'm not interested in that whatsoever. Trading takes time. You've got to put work into it. For those of you who are committed to the journey and committed to learn, you know what, you've got a good chance of getting there. For those of you who want overnight success, think of one time in your life when you've ever had overnight success, and whatever it was, keep doing it because you don't really have overnight success in anything, okay? Keep that in mind. Keep thinking logical. We're going to look at the best style and market for you. Okay, there's no one market that's the best for any one person. For everyone. There is markets that will be better for you, matching your personality, your times that you're going to trade, the time frame that you wish to trade. So we'll look at that. We're going to look at modern technical analysis. This modern technical analysis, what does that mean? It means technical analysis that works, technical analysis that matters, and not having names for everything. Doji, don't care what it means. Shooting star, don't care. Head and shoulders, I've got one. Double bottom, I don't. You know what I mean? Like, these things are just names. They are really 100% completely irrelevant. They're there to sell strategies, they're there to sell books, and we're going to skip all of that rubbish, and we're going to focus on what actually matters. We're going to look at price action mastery and start touching on that. You must become a master of price action if you wish to trade technically and have anything that resembles consistency from your trading. Precision moving average strategy, I'm going to introduce you to one of the many strategies, or one of the three, sorry, that we actually teach, train, and trade ourselves here at Trade with Precision. And I'll show you guys how you can watch myself, Nick McDonald, Travis McKenzie, Graham Kennelly, Toby Gennaro, look, a bunch of us trade. Okay, you can watch us all trade what we do every single day via our service, and this is how it's going to look. 60 minutes or thereabouts of education. I put 60 minutes there because I usually get to the content in about 50, and I usually have questions throughout, so I've just maxed that at 60 there, and 1 minute there to show you. If you want to have a look at what we do, if you want to know more about our strategies, if you want to watch us trade, if you want to follow us with the trades, I'll show you guys how you can actually access that as well. So, first of all, about Trade with Precision. Who are we? What do we do? That handsome-looking chap on the screen, his name is Nick McDonald. He's the founder of Trade with Precision, and Nick put together the company in 2006. Now, a typical question for people that are in the, yes, I believe the webinar will be recorded. Typical question for people when they're being educated by someone or when they're having to look for an educator is, if you're so good, then why are you teaching somebody else? And that's a very fair and valid question. Now, I'm going to give you an answer that's absolutely true. We make money from this business. Just like lots of other people in other aspects of life, probably the same as you, you want to have multiple streams of income. Trading is a high-pressure job. It's a high-pressure, occupation or pastime or whatever it is that it is to you. It's a high-pressure business. When you take some pressure away by having other income streams, it just makes the whole job a lot more pleasurable, a lot more easy. We were full-time traders before we had this business set up. It fills in two things. One thing, it gets us doing other things, because trading can, it can become extremely boring. It can become quite lonely. There's a lot of positives to trading. The lifestyle is great. There's lots of good stuff, but there's also, like anything, it becomes a job, and it's nice to branch out into other things. The thing that you guys need to know is this: Nick didn't start this company because he woke up and went, you know what, I want to start an education business. That's not how this company began. Nick was trading with one of the largest foreign exchange brokers in the world when he was in London, when he was full-time trading, and he didn't have a business. His broker actually contacted him. I'm not going to mention the name of the broker, just because we never really do that. We want to keep it broker free. And basically he got approached by his broker. Now, his broker obviously sees his profit and loss sheets. They see his consistency. They see what he's doing. And they got a personal relationship with the guy, because you trade a decent account, you get to know the people. So they asked him, Nick, would you mind writing a course for us? Because they'd seen what he traded like. Nick hadn't put any thought into it, decided he would do it. And he taught a course for the very first time. He wrote a couple of his strategies out in a course, and he named it Trade with Precision. The company was born. The first client this company ever had was a corporate. It was a massive broker. It wasn't us selling to an individual. It was to a major corporation. Since then, that's how we've grown. We've grown through word of mouth and strong corporate partnerships. We continue to do that. We provide long-term handheld education programs. Okay, so it's a long-term thing that we work with. Specialize in trading strategy, not any specific market or time frame. Trading strategy is what we specialize in. Intraday scalps are long-term swings. It's up to you, whatever suits your personality, and there's a team of 8 professional traders. Got a quick question here. Hi, Craig. What is your win-loss ratio and your risk-to-reward ratio? Yep, I will be covering that later on. And you know what? Just to address this question at the very start, when people ask me my personal win-loss ratio and my personal risk-reward ratio, my risk-reward ratios will vary, as will my win-loss ratio. One thing that we don't do here is we don't say, here's what I do. Why? Because it's two things. One, it doesn't necessarily mean you're going to be able to achieve that. And the other thing is, as well, is that we've taught a lot of people that get better results than us. If I said, this is what I aim for, this is what I'm doing, then you'll see that as the pinnacle, and you'll think that that's the holy grail. That's where you need to get to. Whereas you go through the journey yourself, you find your own path. We'll look at reward to risk ratios, and we'll look at how much we risk on trades, this sort of thing, as we go throughout the webinar. Okay, so just to show you, so you can, lower the old BS radar, because I know as soon as I ever walked into a trading seminar or I went onto a webinar, the first thing I did was I sort of sat there with my arms folded, and I was like, right, you're full of rubbish, you're going to sell me something. So I need to break that down from the get-go. As I said, we work with corporate clients, we work with some of the biggest names in the finance world, and here are some of them here. I'm showing you this because I want you to understand they've done their due diligence on us. You can rest at ease knowing that what I'm going to say in this, there's going to be no rubbish. Okay, I mean, I might speak a bit of rubbish, but what I'm going to be saying, it's going to be factual, it's going to be based on real things. We work with the CME Group, largest futures exchange in the world, ICE. They hold the contracts like the Russell, Dollar Index, bits and pieces like this, all sorts of things. NISA Euronext, largest stock exchange in the world, out there in Wall Street. Trade Station, if you haven't heard of them, they're a big broker in Europe and the US. Great charts. Nadex, huge in America, binaries. ETX Capital, our partner in London, we take care of their education side of the business. CMC Markets in New Zealand and Australia, and RGO Futures in the US. This is some of the corporates that we work with. Okay, so that's just to make you feel a little bit more easy about listening to me, basically. And now we can add FX Street. That's right. Okay, so let's get stuck into this, the path of successful trading. And you know what? I know you're going to roll your eyes. Here it is. You got to learn to trade. All right, learn to trade. One of the things that we come across time and time again, and this is what fascinates me so much about, I've got a very close relationship with a lot of our clients. Okay, I work with them. They come to me, they ask me questions, I help them out with legal problems, and I work with them quite closely. I see people develop as traders, and I also see them at the very beginning of the journey. And it becomes quite comical after you've gotten rid of the frustration of human nature, when you start to realize that I'll work with bricklayers, okay, that have done it for years. They've learned from somebody else. I'll work with lawyers. I'll work with doctors, with surgeons, with accountants, with people from all different walks of life. Some people have been learning for up to 8 years before they even get to practice their profession. So 8 years of learning and working out what it is and working with the best and learning and educating and studying. And then they get to finally practice. Those same people are coming in and expecting to be an overnight success. And that can be in the form of, and generally it's in the form of, they'll kind of be like, no, I'm going to give this a go by myself, Craig. I think I can do it. I'm quite a smart guy. Intelligence has nothing to do with trading, unfortunately. You can be as thick as two bricks stuck together and be extremely successful as a trader. You've just got to have some things. You've got to learn to trade. Okay, just like anything you've done in your life, there is no quick fix. You need to learn what it is you're doing. And I'm not just paying this lip service to bore you guys. This is the God-honest truth. If you commit to something, if you go, I'm going to achieve this goal, but not necessarily tomorrow, not necessarily at the end of the year, make your goal achievable and set out a path, you've got a much, much better chance of getting it. You must learn to trade. Strategies alone do not make money. You could trade the same strategy as me. You could sit next to me all week trading exactly the same strategies that I'm trading, and I guarantee we'll have different results unless you literally are taking every trade I'm taking. Why? Because of the application and how you implement that strategy that makes you money. And that's why I work with people for 12 months minimum, simply because you have the strategy from day one, but you need to learn how to implement that strategy that suits you in the markets and all those kinds of things that makes a business for you successful for you, because we're all different. You got to learn to trade. That's the only secret to trading. It's just that most people don't have the patience. Okay, most people want to get rich quick. It's just not going to happen. First, we've got to build some solid foundations. So building those foundations, the biggest mistake traders do or make is they start from the wrong end. And what do I mean by that? Well, basically they find a successful strategy or somebody to teach them, some guru of some sort, and they go, you know what, I'm going to do it. I'm going to just throw myself at this. I'm going to make this happen. Cool, let's go. And then what they do is they try and adapt themselves to that strategy. Now, here's a prime example. I'm sitting here in Bondi in Sydney. If I was on, listening to a webinar in America or whatnot, somebody says, you know what, the only way to trade is to trade the ES Mini, or the ES, okay, which is the Mini S&P future. It's the only way. Trade US index futures. That's the only way you're going to make money. It's the best market to trade. It's where it's at. I'm sitting here in my place in Sydney, and I'm thinking, oh, okay, well, I want to be a successful trader. I'm dedicated. I'm committed. That means that I'm going to have to either stay awake till very early in the morning, or I'm going to have to get up extremely early in the morning to trade. Now, you know what? I'd make that sacrifice. Everyone's thinking, well, you got to sacrifice things. You got to get what you really truly want. Well, that's all good and proper. I'll make those sacrifices, but for how long? I have to shift my life in such a dramatic way that the longevity of me actually sticking with this is probably going to be somewhat unrealistic. I'm probably going to drop off quite quickly. And when I hit a speed bump with my trading, and you always will, I guarantee you that much, then you're going to be somewhat frustrated and you're more likely to throw in the towel. So what we need you to do is we need to go, here's some strategy, let's find out how it works for you, as opposed to the other way around. So don't try and be somebody else. Okay, try and work in something, find somebody or some strategy or something that suits you and your time frames and apply it like that. Just the same as a left-handed golfer wouldn't go out and buy right-handed clubs just because they're the best golf clubs in the world. Traders do that same sort of thing. Okay, I'm a right-handed golfer. I'm not going to buy left-handed clubs just because they're the best in the world, because I'll be playing them backwards. Okay, same thing applies. Find some strategy that's applicable to you, the times and the markets you wish to trade, and go for it. The number of steps you must take before you even think about strategy. And guess what? We are going to take those steps together. What style and which market? You've got to ask yourself some questions here, guys. These are valid questions, and for those of you who are sitting there going, "Dagnabbit, just get to the strategy, Craig." I'm not just about strategy, because strategy is like the last thing. Trading is a business, and we must run it like a business. We have to have a business plan. You've all heard of trading plans, I'm sure, but most people, what they think of as a trading plan is more to do with the strategy. Okay, these are the strategies I will trade. I will stick to these strategies. I will stick to this risk, and yada, yada, yada. Well, before we even set that task of the strategy and all that kind of business on the inside, we've got to work out what we're going to do. So let's hit this. Question is to ask yourself, what type of trading would best suit my circumstances and my personality? Have you ever asked yourself that question? If you haven't, ask it. You can either write this down now, or you can come back and you can source the recording at some stage. Because I really think that, we haven't got I'm not going to stop here and let you write your answers down first, because we just simply don't have the time. But one thing I will say is that this is going to be extremely important. Whether if you've already done it and you're trading and you're making money and you're consistent, then 2 thumbs up for you. Great work. But if you're not, it could sometimes just be the simplicity of just asking yourself, am I doing the right thing here? Am I in the right market? And it could change everything. I promise you that much. It could be, that's how close you are. Which market or markets would best suit my circumstances and my personality? What market? What suits me? Personality of the market. Let me make this very clear. If you like to do some analysis in the evening after you've been at work or played golf or whatever it is you do with your time, you like to do your analysis over a nice cup of tea at 9 p.m. after you've had dinner and you've watched EastEnders. And you like to then go and walk away and pat the cat, talk to the dog, come back to your computer and just take your time and relax, then intraday trading is not the style of trading for you. Okay, you need a lot of time to digest things, to look through things. You're looking for longer term moves, maybe less amounts of trades, but more, a longer span for the actual trade, like more days to be in it. If that's like you, then you swing trade. You trade longer term markets. If you like to go, bam, let's get in, and make decisions fast, I can shake off a losing trade quickly. I just want to get in there. I've got an hour. Let's hit it. Let's go. Then you've got to consider what market's best for you. Swing trading would not be the market for you. Intraday trading, foreign exchange, index futures, something along those lines. That's the market for you. So that's what I mean by personality, your circumstance and your personality. The circumstance as well as what time are you trading. Are you trying to trade a market that's shut? Because you can't do that. So these are the types of things you've got to think about. Do you want to trade full-time or part-time? Now, every now and again, I get the scariest bit of news from somebody. Somebody calls up all enthusiastic, Craig, I've quit my job. I'm going to trade full-time. I'm that committed to it. I've just thrown my job, and it's like, oh, God. Oh, no. Okay, right. Because trading takes time. Quitting your job, you're putting so much pressure on yourself to be successful. Much, much, much better to, keep your job and trade. When your trading is consistent enough and your results are good enough that you can back yourself, you're confident enough because you've got the actual proof that you can do it, then quit your job. All right. You got to crawl before you can walk. Just as an athlete's physical and mental makeup might mean they are better suited to long distance running and short distance, you're probably going to be more suited to a certain market or style yourself. So, ideally, you don't want to ask a question. Sorry, ideally, you would ask these questions before starting trading, but you know what? It's never too late. So, should you day trade or should you swing trade? And just so I can get a bit of an idea for who's doing what here, if you're day trading, just write day. If you're swing trading, just type swing into the little chat box there, just so I can get a feel for who we got. Swing trading, longer term, maybe 4 hour, 8 hour daily time frames I'm talking about. Day trade, 1 minute up to say 2 hours or something like that. Come on, guys, don't be scared. Swing or day or both. Good point. Keep it coming. Everything that moves. Me too. Bit of both, bit of swing, bit of day. Don't be scared, guys. There's no wrong answer. How long till a silence becomes uncomfortable? I'm going to leave it now. Okay, so some people are just not playing a game. Not a problem. In your dreams also. Doesn't that, I hate when that happens, when you go to bed and you're thinking, I just got my target hit. Actually, that's not a bad dream. It's when the stop gets hit in your dream. You get used to that. All right, so some people aren't playing ball, and you know what? Some people, I could say, look, I will give you a Ferrari tomorrow, guaranteed, if you type something, and they'll still go, no, I'm not going to type anything. That's cool. So let's have a look. Should you day or swing train? Which style is actually best for you? And I wonder if the people that have put their answers in have actually done the, they've asked themselves the questions as to what suits them best, or if they just, boom, show something. So most beginners become attached to a particular market and style because of a recommendation from a mentor, a friend, or a trading educator, or all of the above. They're led to believe that X is the only way to make money. And we want to look at 4 variables. There's 4 variables to consider. Personality. Which style are you drawn to? What do you think is best for you? What do you want to do? Time. How much time can you dedicate to trading? Can you give it an hour? Is it 4 hours? Is it 2 hours? What time have you got? Very important question. When will you be able to trade? Of course, the market's got to be open for you to be able to trade it. And which market is best suited to you? Now, there's no market, there's no sort of one-size-fits-all market. The closest market for one-size-fits-all would be foreign exchange. And I mean, look, I trade futures, I trade stocks, I trade foreign exchange, I trade whatever floats. Now, whatever's moving, wherever the trends are, I'm on it. I don't really care what the product is. One thing I can say, though, is foreign exchange has always been on my radar, simply because in terms of all of these, personality, you can swing trade it, you can day trade it. Time, you can trade it whenever you've got the time, because it's always open 5.5 days a week. When, you can trade it any time. Market, well, the market moves, okay? It's extremely volatile, so you sweep. Pretty much foreign exchange covers all those. So if you're questioning what can I do, what would be best, and you haven't got the answer, then foreign exchange could be something you might want to look into if you haven't already. So which market should you trade? There's no best market. Which is best to you? 6 criteria. Methodology. Yes, we will get there. See, everyone wants to dive straight in on the first date. We just take it slow for the time being. You've got to take me to dinner first. Okay, so which is better suited to you? 6 criteria that we look for. And just to recap, guys, there is strategy towards the end. I know everyone wants to dive into the strategy, but you just got to trust me on this point, guys. This is important stuff too. Okay, you got to look at liquidity. Liquidity of a stock or a market is extremely important because I know people that trade small caps. The problem is small cap trading is fine. Small cap trading is absolutely fine if you buy them and you own them. Okay, you may be long term. But trading small caps on, say, a spread betting or a CFD account or whatever you've got the option to trade, there's not a lot of liquidity. So it's fine if you've got a small account. But what happens when you can't get big? You can't get the sizes you wish. You can't get the fills you want. And it's very difficult. Volatility. Does the thing actually move? There's no point in getting involved with a market that doesn't move. Our objective is to get the direction right and to profit from that. If it's not moving, you can't get direction right. Exchange trading hours. You need to know what they are to see if obviously they fit in with your time. Leverage. How much leverage can you get or do you need to trade this market? How much can you get from the money you've got? Maybe you haven't got enough capital, which is the next one. The capital requirement may vary with different markets and different brokers depending on where your money's held. I know in the US, their laws are very strict when you're trading equities and futures and the likes. Okay, so you need to make sure you fit in around the capital requirement. And the personality. Personality of the market. Does it suit yours? Do you have a good match? These are the types of things that we look at. Okay. Which style of market is most profitable? There is no most profitable market. It's simple. The best traders make the most money. That's just the way it is. When you lose, someone takes it from you. So that's why you've got the masses that lose and a very small amount that have got lots and lots and lots of it. Okay, because the rich get richer, as they say. Okay, so the following are irrelevant. The time frame. Doesn't matter what time frame you trade. The trading style. It doesn't matter what style you trade. Doesn't matter what market you trade. It doesn't matter your intelligence. It's completely up to you. Coming back to that first topic that we touched on, it comes down to you've got to learn to trade. Okay, as boring as it might sound, it's a God-honest truth. You've got to learn to trade. Without learning to trade, you've got Buckley's chance, guys. Okay, so let's have a look at some of the modern technical analysis. Now, I know that first part can be quite tedious at times. I understand that we do it because, we're not the company that just dives straight in and does it the conventional way of, let's get everyone excited and hyped. We want to show you what really, truly matters. Our philosophy and the way that we trade is built around exactly what I'm showing you here. And we're now going to get to the technical aspect of this webinar, the modern technical analysis, the precision way. Now, you can see on your screen there a cake, tin, mixing bowl, eggs, yada, yada, yada. And what we're going to go with here, excuse me, we're going to go with the whole, baking a cake analogy. Look, it just works. All right, it makes sense. It fulfills what I'm trying to achieve with this. So, technical ingredients. Technical analysis. These are the ingredients. Just the same as when you bake a cake, you cannot bake a cake with just flour. You cannot bake a cake with just cocoa. You need a number of different ingredients to come together to create the right climate to make a cake. Now, for me personally, and I can talk from my own experience because I wasn't always good at trading, and sometimes I go through patches where I sometimes think I'm not good at that time as well. But no, seriously, there was a period of about 3 years where I was doing every man and his dog's course. I was reading all the books. I was going to the pubs, to the social events. I was talking with other traders, other loser traders, other traders that weren't making money. We all went to these things and we talked and we talked and we talked. And I was that guy who I knew everything about all the indicators. I knew what the latest indicator was. I knew what this did that. I knew that, blah, 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 blah. I knew all of that. Problem was, I actually thought that to be a good trader, I needed to know a lot about trading. It's not actually the case. To be a good trader, I've got to be a good trader. I've got to trade well. I've got to have something, a systemized approach that I can carbon copy. I can do the same thing again and again and again, and then produce myself with an edge. So, what a lot of people on this webinar will have is you'll have a really good understanding of technical analysis. So there's probably going to be very little in terms of individual elements that we can teach you. We don't have anything special in terms of, anything new. What we teach is straight out of the box stuff in terms of, the indicators that we use are straight out of the box. You can get them with anyone. There's nothing special about the indicators. What is special about what we do, though, is that we've got our own recipe for the cake. We've got a set number of checklist. We've got a checklist with a set number of things that tick off. And that's what we do. So the ingredients are really, really important. You may have all the ingredients, but you might just be combining them in the wrong order, and that's what we provide you with. We provide you with that recipe so it all comes together and you come out with that result. Okay? It's as simple as that, guys. There's more disadvantages and advantages to technical analysis in the old school traditional sense. Basically what I'm saying here is people will trade an ascending triangle just because there's an ascending triangle. That's all they will look at. That's one element. Okay, people will trade the cross of two moving averages. That's one element, an element that I think is probably the craziest thing in the world because I know quite a few successful traders and not one of them make any money doing that, but that's not the story. You can't make a cake with just one ingredient. You can't trade with just one element. You need to combine lots of things together. And you know what? There's people that come to me and say, I'm going to give it a go myself. That's fine. Go for it. Problem is, you're going to waste a lot of time trying to come up with that right combination because there is so many out there. I'll be honest with you. I just copied what the guys that I work with do. I found some guys that were really good at what they did, and I just copied it. No shame in saying that. The easiest way to get rich is copy someone who is. Just do that. Do your due diligence, obviously. Find someone that you believe in. Find some things that work for you, that make sense to you, you can fathom, you understand, and then just put the work in. So trading strategy is the recipe. What we want to do is we want to combine the factors. We want to combine these things to give you a systemized approach with written checklists that you can go through and have an objective viewpoint. Essential for trading success. Combine those technical factors together, turns it into a recipe. Technical analysis to know. Focus on what truly matters. Let's strip all the rubbish and confusion that is trading and come back to the basics. Markets go up, down, there's buyers and sellers. End of. So let's work on these things. Are the bulls or the bears in charge? Simple stuff. Make it easy. All right, bulls or the bears in charge. Who won each candle, the buyers or the sellers? Now, you can call it a doji, a shooting star. You can call it Johnny. You can call it Paul. You can call it Tom, Dick, and Harry. I don't care what you call it. Just know what it's telling you. There's three types. There's bullish, there's bearish, or there's indecisive. You can name it anything you like. A candle's a candle. It tells you information. If you can't read that information, but you know what the name is, you're barking up the wrong tree. You're going about it the wrong way. Is there an uptrend, a downtrend, or no trend? And I'm going to test your ability on this later and see what you really know about trends. Okay, and I'm not doing it to be smug. I'm just doing it because quite often people will say, Craig, get on with it. I know about trend. I know what an uptrend is. I know what a downtrend is. But they don't actually know the critical moments when things change and when things are, becoming a new trend. We use leading indicators only. So in the sense of convergence and divergence. When you've got a trading strategy, you combine your technical knowledge to provide you with a precise entry, a precise stop, and a precise target or targets. You need to know where you're getting in, where you're getting out for a loss, where you're getting out for a profit. Because then once you've automated, once you've done all that, you can walk away. No sitting at the screen shouting at it. Excuse me, I need a glass of water. Price action mastery. Let's have a look at some of this. What is price action? Well, let's be honest here. It's historical price data plotted on a chart without any indicators, and it's the purest form of data that's available. That's it. All indicators are a secondary measure of the data. Okay. So remember this. Price is price. It's real. It's price measured by time. It's facts. It's there on the charts. What's happening now or what has happened in the past. Indicators follow price, and this is where a lot of people fail to understand this. Indicators follow price. They don't tell you where price is going. They follow price. Just remember that. What is price action mastery? What's a detailed understanding of price? Points that indicators are not required in trading. They become the icing on the cake. If you give me a a screen full of indicators and say, make your decision, Craig, I will not touch it. If you strip absolutely everything back and just leave me with the price action, I can still make trades. Okay, I'd rather have some indicators on there, but you see people that have got the charts just totally chock-a-block full of indicators. They can hardly see what's actually going on. Price action is the most important thing. Don't forget it. Okay, don't forget it. Price action mastery requires knowing these elements so well that they become second nature. That is optimal chart structure. Okay. I've got someone, price action 100%. Ooh, yeah, caps. That's right. Price action is God. It is key. Optimal chart structure. What on earth does that mean? Well, I'm going to show you. We need to be trading with the trend. We're going to focus on some of that. We're going to look at price, support, and resistance. True support and true resistance. Moving averages, the patterns and the zones, the areas that we look where there's opportunity at levels of equilibrium. 5, we're going to check out the candles. 6, we're going to combine multiple time frames to help us to have a bigger picture understanding of what's actually going on. And first, we're going to start with optimal chart structure. I guarantee you, yes, you heard it, I guarantee you that if you start focusing and trading purely, just purely, off charts that have optimal structure, your trading will improve. Your trading will improve if you trade off charts with optimal chart structure. And what on earth is it? It's vitally important that you trade off clean, smooth-flowing, trending charts. Why make trading any more difficult than it needs to be? Let's go for the predictable stuff. We need to stack the probabilities in our favor. Trading optimal chart structure increases the chart's predictability. Therefore, hopefully, your probability of success. We want to avoid charts which don't have a clear trend. Very simple rule. If it's not clear, it's not there. Next one. Avoid charts that have lots of gaps. Gaps increase risk. Stay away from risk. Avoid charts which have candles with big tails. Spikiness. Don't like it. Often it will show either a lot of news around that market at that particular time, or it will show not an awful lot of liquidity, or it will show that it's being manipulated. Either way, it stops you out too quick. No good for us as traders. Avoid markets that are range-bound. Sure, there are some strategies for range-bound markets, but it makes it a lot easier if you're trading with a trend. And avoid charts that have erratic price action. So let's have a look at what that looks like. Avoid charts with gaps. Here is a gappy chart. If you're trading, if you're trading stocks on an end-of-day basis and it's a gappy stock, stay away from it. It's fine for investors because they can ride these gaps out. But as a trader, a gap can cost you dearly. Avoid long tails and wicks, this choppy market. Avoid this. We don't want spikes like that. It just increases our risk too much. And a chart like that, without even knowing what the chart is, that to me says there's very little volume going through that. It's an ugly looking chart. Compare those two charts that we've just looked at with optimal bullish chart structure. Check this out. It's a clear series of higher highs and higher lows. Very simple. There's no extremes of buying or selling. There's good buying. There's no extremes. Like what I mean is no massive candles. There's no radical uncertain behavior. There is just steady buying momentum. This trade is predictable. This trade is a dream. This is where you will make the majority of your money. Not here and not here. Focus on this. Optimal bullish structure. Optimal bearish structure is turn that chart on its flip side. Okay, you just want to be smooth and flowing. Let's jump into the moving averages, patterns, and the zones. What we look for. So what are moving averages? Now most of you probably know what a moving average is. It smooths out what price is telling you. Okay, what it does for me as a trader, sometimes you need to relate trading topics or trading things back to what makes sense in your normal life, because trading is one of those things where what you'd normally do for success in the, I guess I call it the non-trading world, is pretty much the polar opposite to what you need to do in the trading world. Okay, for example, working longer, working harder generally means, making more money in the normal world. In the trading world, it doesn't mean that at all. Okay, as a matter of fact, quite often it may mean the opposite. The more you trade, the more you lose. It can work that way. Anyway, so what I'm saying here about these moving averages, they give us a point of equilibrium. Now think of it this way. Let's say that I've got a shop on the high street. I sell shoes. Now, for me, I need to obviously make a profit on those shoes. I need a markup to make myself a profit on these shoes. So I need to know I've got to buy them at wholesale and I've got to buy them bulk to get the best possible price so that I can make some money on it. Well, I need a guide when I'm trading to find out exactly the same sort of thing. So where is this wholesale price? Well, the moving averages help me to find that point of equilibrium, that point of which I start to get interested. I start to think, is this the right time for me to be buying or selling if we're going short? They provide this equilibrium zone. I'll show you what it is in just a moment. They smooth out the short-term fluctuations in price and they highlight trends. We use the 200, the 50, the 20, and the 10. 10 black, blue 20, red 50, 200 is green. Simple or exponential, it makes no difference. As a matter of fact, just to prove this to you, I use exponential. Nick, one of the traders here, or the guy who puts this together, uses simple. Why does it not matter? Because it's a zone. It's not a science. We're looking at it as an area. Okay, it's an area. So, let's have a look. Correct use of moving averages. Many traders view moving averages as support and resistance. We do not. Okay, we do not endorse entering a trade should the following occur. Price touches a moving average. It does not mean it's a buy signal. No way. The crossing of two moving averages, probably one of the oldest tricks in the book. One of the first things that I ever learned and one of the first strategies that failed miserably for me. It's lagging. Simple as that. Moving averages are dynamic trend lines that indicate sensible buy and sell zones and indicate suitable price equilibrium level, and here they are. We use a buy zone and we use a sell zone. Now this is very interesting because you know what? When you go out and you trade for the rest of the day or night or morning or whatever it is, you will start to see this if you put the 10 and 20 on your charts. The green color or green color there between the 10 and the 20 is the buy zone. You'll notice there's a bit of a yellow tinge as well on the outside of that. That is also considered fine. Okay, that's the buy zone. As I say, it's a zone. In and around that 10 and 20 period is the area. Now, let's start at the bottom of that. Let's just look in this green or yellow area. Price goes up, it pulls back, starting at the left-hand side of the screen, back into the yellow area or green. Moves away, pulls back, moves away, pulls back, moves away, pulls back. Now, I'm not going to sit here and say to you, we traded all of these, because that would be called hindsight trading. And I have a very deep-seated hatred for anybody that hindsight trades, because if you are a good trader and you are making money from trading, then chances are you're also keeping records of your trade because you trade as a business. And you need to be able to see what you need to do and what you have been doing in your business. So if you're going to educate somebody, show them what you are doing. This is not showing you where the trades are. I'm pointing out the area, the buy and sell zone for you. The buy zone on the left, the sell zone on the right. You can see when price pulls back into that area, it generally moves away when we've got a good trend. We need to obviously use that as one element. It's not by itself, one element in a strategy. So that's the first one I'm going to look at, the buy and the sell zone around the 10 and the 20 period moving average. Let's get into candles now. The plain truth about candles, there are hundreds of candlestick patterns and names. Candles are not a complete trading strategy. Simple as that. Think of a candle pattern as just one of the ingredients for your overall recipe. All right, just one thing. It's not, doesn't make a decision for you, just one thing. Learning lots of candle patterns and the names takes away what's really important. Who is in charge, the bulls or the bears? We want small, bullish or bearish candles in that buy or sell zone. So let me just tie this together a bit more. We've got, if we're in the buy zone, we want a small green candle in that buy zone. That's what we're looking for. If we're in a downtrend, we want a small red candle in that sell zone. Okay. Small in comparison to the candles around it. There's no scientific formula to tell me this is a small candle, Craig. It's literally look at the candles around it and we'll make your mind up from there. It provides us with a high reward. Now, we're always going to risk 1% of our account on our trades, okay? And you're going to risk whatever you risk. It's up to you, but we go for the 1% thing because we're trying to build businesses that last for a long time and traders that stick around, not flash in the pan. So the risk is going to remain exactly the same in terms of how much you're risking. But if you've got, say, let's make it very simple. If you've got, say, 100 points space until there's resistance and you're going long, so 100 points that you've got as potential reward on the trade, and you've got a 20 pip stop, you can get a 5-to-1 out of that trade if you go full sticks in, full out. If you had a 50-point stop, it's a bigger bar, you can only get a 2-to-1. So you can see that the reward potential of a small candle therefore becomes much greater. We like this as traders, same risk but more potential for a bigger return. That's what we're after. That's why it's good. In an uptrend, locate a small green candle or up bar in the buy zone. In a downtrend, locate a small red candle in the sell zone. Okay, looking at multiple time frames. In trading, it's always important to consider the big picture before entering a trade, simply because a lot of new traders, they make the mistake of viewing one time frame. They'll jump in and they'll go, right, I want to trade now. I want to find a trade. I need to find a trade because I'm a trader and I've got an hour. They jump in and they look at euro dollar. They screw right down to a 5-minute chart and they go, oh, there's not really much going on here. So then they screw down to a 2-minute chart. Oh, nearly. 1 minute. Bang. Cool. Now I've got options. They start bashing away on that time frame without even looking at the higher time frames. It just clouds your vision. You can't see what's around you. You don't know where the major levels are. You don't know what the major trends are. You could be buying something right in a smacking downtrend as you're about to hit some resistance for it to sell. Where you're buying, people are selling. You can't, you've got to avoid putting yourself in those kinds of positions. You've got to look at the time frames around you. Always check the higher time frames because the trend of the higher time frame will indicate the momentum in which price is likely to follow. Major support and resistance areas will be much more apparent on the higher time frame. If you're looking at a 1-minute chart, you're not going to be able to see the daily support or resistance. So here's a little chart here. This is something to help you out. The lowest time frame we refer to is called P. So you can see on the left-hand side, it says P chart. That would be considered our entry chart, where we're taking our entry from. At a minimum, we must refer to the next higher time frame for confirmation. This is called P1. Okay. Now, to be honest with you, if you're trading, this is a general rule. Okay, it's very simple. On the left is the trade you're taking. Sorry, the time frame you're taking the trade from, and from the right is the time frames you need to check. If you're trading a 1 minute, then you've got to have your 2, your 5, your 15, your 30, and your daily to get a view of the small time trend up to the 30-minute, but also a view of any major support and resistance levels and the major daily trend. If you're trading off a 4-hour chart, you need to look at the 8-hour multiple of 2, then the daily again, and then the weekly, and then the monthly. You need to see what's going on those bigger time frames so you can look for support and resistance and see what the major trend is. You don't want to be trying to trade against the major trend. The best trades that you're going to take are the ones, and so the best trades you're going to take in terms of potential for big moves are the ones where, say, the 1 hour, the 2 hour, the 4 hour, the 8 hour, and the daily are all in agreement in terms of direction. They're all pointing in the same direction for you. That is where you're going to find your best opportunities and your best trades. Okay, so the moment you've all been waiting for, drum roll please. There is sound effects on here, I just don't know how to use them. So we're going to get to this precision moving average strategy now. We're going to start to put together some of these elements. We teach you the individual elements, now we're going to bring it together and we're going to show you how simple this can be. Make one thing very, very clear. This particular strategy has 19 rules when we teach it on our courses. Now I'm not saying you've got to come and do one of our courses to learn from this webinar. All I'm saying is that we're going to give you some of the elements, we're going to give you some very important elements. You're not going to have it all. My suggestion to you would be, if you want to use this, is to start looking, like putting our things on your charts, your moving averages, that kind of thing, and start to look into these zones. Start to see what happens around there. The other option is just come and do a course and learn how to do it in full. So the strategy, to locate a chart with optimal chart structure. And literally, you've got your pen in your hand. When you're doing this, you're ticking these things off. Optimal chart structure is the first thing. Trade only in the direction of the trend on P and P1. Price pull back into the buy or sell zone based on those moving averages. Small bullish candle if you're going long, small bearish candle if you're going short in the direction of the trend. Ensure you can achieve at least a 1-to-1 risk to reward. That is at least. The minimum is 1-to-1. And you know, people sometimes go, oh, I'm only 1-to-1. You can get very wealthy risking 1-to-1, making 1-to-1. You just got to make sure that you've got a good, a higher expectancy than 50-50. Place stops with strong price action support protecting them. So when you put a stop in, make sure it's safe. Don't just pick a number out of thin air. All right. Risk a maximum of 1% capital on each trade. So let's have a look here. And again, these are live screenshots as we've been triggered into the trade. P is the entry chart on your left-hand side. P1 is the higher time from above it. So let's just pretend it's 5 and 15 minutes, just for the sake of it, okay? 5 on the left, 15 on the right. What we've got here is just as we've been triggered into the trade. Let's have a look at the checklist. Is there optimal chart structure? Is there lots of gaps? No. Is the price erratic? No. Is it smooth buying momentum? Yes, on both P and P1. We got it. Is a trend on P and P1? Yeah. There's obviously an uptrend, higher highs and higher lows on P and P1. Rod, they are live screenshots, mate. So that I'm not opening up a chart and showing you the chart moving, but what I'm saying is this is a screenshot taken as the trade was taken. Okay, so that's what I've captured there. What I'm not doing is I'm not going back 15 bars and going, see, there's a strategy there. I'm showing you this was a trade either taken by one of us in the trading team, or it was sent in by one of our clients for us to mentor them on. That's what I mean by live. Okay. Is the price in the buy zone? Yes, it's in and around that 10 and 20 period moving average. So we're fine on P and P1. Is there a small bullish candle? Yes, on P there is actually 2 small bullish candles. They've basically got exactly the same range as each other, which is fine. And on P there is also a small bullish candle in that buy zone. 5, is there a reward to risk of 1-to-1? So if I'm, the space, my entry is going to be as I break that little green candle, and my stop is going to be underneath the low of that. So for me to get 1-to-1, you can quite easily see that there's plenty of room before the highs. Okay, now I'm not saying that the highs are going to make this resistance. All I am saying is that it is nice to get your first target before those highs are taken out. Okay. Is the stop protected? Yes, it will be underneath those lows, and if the price was to trigger us in, which it now has done, and reverse, it would be setting a lower high, and therefore to stop us out, also a lower low, therefore the trend will have reversed. Maximum 1% risk on the trade. Here is a live screenshot as it was filled in the trade. Here is the outcome of the trade. Multiple targets reached. We use limit orders to ensure profits are taken. Now, before you sit there and go, of course he's going to show us a winning trade. I agree. Of course I'm going to show you a winning trade. I'm trying to show you how this works, not how it doesn't. Do we have losing trades? Yes, of course we do. Okay, anyone tells you they don't have any losing trades, run a mile. Okay, we do. We've got plenty of losing trades. It's just part of the nature of trading. You can't always be right. What I'm trying to show you here is that you combine the elements together and know what they are and have a strict strategy to follow with proven checklist. You get really good at executing that strategy flawlessly time and time again. You've got an edge in the market. The probability, if you can do that, is that you will make money over time. So let's have a look at this short example, the checklist, the optimal chart structure. Yep, lower lows and lower highs, no gaps, no erratic momentum or movement. Is there a trend on PMP1? Yep, I just said it basically. Lower lows and lower highs. We've got a downtrend. Is the price in the sell zone? On P, yeah, it's pulled back in and around that 10 and 20. Notice how different this one looks to the last one. Remember, it's in and around that 10 and 20. And you can see on P, it's around that level, and on P1, it's also around that level, so it's fine in the sell zone. Is there a small bearish candle? Yep, on P and P1. Remember this, we've just been triggered in this trade again, it's just triggered. Achievable risk reward of 1-to-1. Stop will be at the high of that little red candle. Entry will be at the low of that little red candle. We've just been filled. Can we get at least a 1-to-1 before the lows? Absolutely, we can. Plenty of space there. Is a stop protected? You'll see on P that purple line is a level of support. It's not the best level. It has been broken, but we've got to see it as a level of support. Price has come up, tested that level, and since then it has rejected. So our stop is even more protected because there is that level of support there that we're rejecting now. Maximum of 1% risk on the trade. And here is the outcome. Now, a lot of people say, do you trail stops? We trail stops as the market allows it. As there are new lower highs, I will trail my stop to those. Okay, so you can see the lower high across to the right, trail the stop. Lower high across to the right some more, trail the stop. Okay, that's how you go about it. Not just I'm going to slap in a 10 for 10. When it moves 10, I'll move my stop 10. That's not how professionals trail their stops. You've got to read the chart, let the chart tell you what to do. Okay, so is there any questions right now before I conclude what it is to trade with precision and what this strategy is about? Before I go any further, let me just remind you, we're looking for optimal chart structure, a clear series of either higher highs and higher lows. Okay, we want to have ourselves in the buy or sell zone around that 10 and 20 period moving average. Okay, with a clear trend. We want a small green candle if we're looking to go long. Okay, small green candle in that buy zone. We want a small red candle in that sell zone. Okay, if we're going short. All right, we've got to break the high of that small candle if we're going long to buy, and the stop goes at the low of that small green candle. Vice versa, if we're going short, we need to make sure that we've got a safe protected stop loss. We also need to make sure we can get a minimum of 1-to-1. We can go for higher targets, but we always look to take at least 1-to-1 to minimize the risk and to move on. And that is the basis for that strategy. Now, I've got a couple of questions coming through. Is there an easy way to scan for the most appropriate charts? Any software? It's a good question, and the honest truth is I do it all by eye. Okay, I know that a couple of the boys have got some stuff that they have automated, like it will spit out what am I trying to say, like a watch list of things that fit the criteria. I don't have them. If you can write that, then of course, there's simple ways to do it. But in all honesty, I look through the FTSE 350 every night. I look through the Aussie 200 every morning, and I look through about 30-odd different futures and foreign exchange pairs throughout the day. If I did the entire scan in one go, it would take me half an hour max. And it's because the most important thing I'm looking for, first of all, is there a trend? If there's no trend, I don't even spend a second on that chart. I just bang, skip to the next one. The only reason I can do it fast is because I've got systemized ways. For example, if I want to skip stock, I press down, bang, it changes instantly. Okay? So you've got to have your workstation set up in a way that allows you to scan quite quickly. The other thing is, if I don't have the price pulling back into that buy zone and there is a trend, I don't even bother. So it's a process of elimination, and the first three factors usually eliminate 98% of the charts you look at, so you get through them really, really quickly. Can you repeat trail of 2 what? Can you be a little more specific? I don't know what you mean by that one, Berkey, or sorry if I pronounced your name wrong. So you shoot that one back at me. Is there a book on price action that you would recommend that is similar to your teachings? To be honest, mate, I don't really read books on price action. I haven't read books on price action for years. The only books that I read on trading will be things like the New Trading Wizards, things that are getting into the mind of the best in the business. The rest of it's kind of I know what I'm looking for. So in terms of books, there's not really anything that I can recommend. I'm sorry, mate. If you want to learn more about what we do and try and pick our brains for it, we do have on our website tradewithprecision.com There is a free newsletter that we've got, and we send out our trade ideas and what we think the market's going to do and why once a week with what we provide with the ICE exchange. You can sign up on the home page, and we've also got some free webinars that you might want to have a look through to try and get some more clarity on that. But as far as books, I'm sorry, not really. Okay, so stops. Okay, so trailing stops was your question. Let me go back. Okay, so trailing stops. I don't think you can see my cursor. Let's start with, see where the top red dotted line is. Okay, the highest red dotted line. That's where our original stop goes. Once we've got a lower high, so you look across to the right, and you've got those two big bars, one green, one red, right next to each other, the most recent lower high. My stop would then trail to there, okay, a tick above there. Then if you come across to the right some more, the next lower high, my stop will be trailed from the previous two big bars, the green and the red, the high there, down to that next lower high, and that's how I'll trail my stops. What charting package do I use? MetaTrader doesn't actually have 2-minute, 2-hour, and 8-hour time frames. You know what though, Dragonfly Doji, killer name. What MetaTrader doesn't have, it makes up for being free. MetaTrader 4 has got some good stuff. Look, I used to use it, and I've still got it as a backup. You know, I've got backup systems in place. I haven't looked at the charts for a long time. I personally, at the moment, use TradeStation. Okay, I really like TradeStation. That doesn't mean you've got to go out and buy TradeStation charts, by the way. It's personal preference. You can use any charting package as long as it suits the needs that you have for any given time. These days, there's so much uncertainty. The trend is not always clear. I disagree, Ray. I think I understand what you're saying, but I'm not disagreeing just for the sake of disagreeing. I'll give you my logic behind why I do disagree with that. The trend is always a trend. There is either a trend or there is not a trend. One of the things that we try and teach Trade with Precision, that we preach and we practice ourselves, is don't just get pigeonholed in one market. For example, if you just traded, say, the ASX 200, you would have a hell of a time trading it. It's ugly, all right? It's just not nice. We haven't had any good trends for quite some time. And you know what? We could be trending right now because I haven't looked at the actual index itself for quite some time. But you've got to go to areas where there is trends. There is some cracking trends out there on the yen pairs at the moment. There's the silver. Silver's just kicked off again. We're seeing some moves in silver. We've got crude oil. Crude oil's trending lovely on a daily basis. I believe copper from a couple of days ago. I'm not sure. I haven't checked copper for the last couple of days, but copper was trending well. There's always going to be trends out there. You've just got to be willing to find them and know what you're looking for. So there definitely are trends out there. Do you have a checklist available for prior to entering a trade? Oh yeah, mate, everything's a checklist. I don't know if you can hear it. That's my wall in my office at home here. They are my checklist. I don't stray from those checklists. Everything that we teach has checklists. Now, I don't have a PDF to send you with those checklists now. Go through and watch the recording. You'll pick up some of the elements of the checklist. The checklist for our trades are anything between, I believe, 16 to 19 rules. You don't need to have all of them. We've got a scoring system to make sure that you're looking at the right thing. So if you want more information, then in all honesty, our full courses are what gives you the full checklist. Keep the questions coming, guys. While they're coming, I just want to conclude, and I'll continue to answer any questions then. Choosing a style of market that suits you and your circumstances is a crucial step for your long-term trading success. So we're talking a lot about everything else. We've got to have a look at the circumstances. Big difference between technical trading and strategy. What I want to show you here, guys, is I want to make sure that you've got the opportunity to watch what we do on a daily basis. Okay. Precision Perspectives is how you can contact us and you can see everything that we do. SMA or EMA is fine. Price of courses, I'll send you a link in a minute and you can have a look at it yourself. The best thing for people to do is we've got this special $10 trial. If you want to know more about what we're doing, how we trade, what we trade, and all that around about, go to tradewithprecision.com/PP trial. We do a minimum of 2 videos per day from a team of 5 of us do most of the trades. There's a team of 8 of us, but generally most of the trades come from 5 of us. Variety of styles of traders, times of markets, variety of markets. They're live trades, and we do live market scans as well. We produce the video and send it out to your email so you can open it up, place the trade if you like it. You can learn an awful lot there. Go to that web link there. It's a $10 trial. Have a read up on it. See what you think. If you want that link well, you actually got that link right there. If I just send it in the chat to you right now. And that's me done, guys. That's my hour. I hope it all made sense. I hope you all enjoyed it. If you want more, check out tradewithprecision.com and email info@tradewithprecision. Thanks very much. Over to you. Thanks.